So we know who is speaking to us, who is giving us a lot of, all of the knowledge that she's embodied today. So yes, Mrs. Ola is an accounting graduate. She is a CFA charter holder and a member of the CFA Society of Nigeria. She started her career in treasury as a Naira dealer at Kakawa Discount House. Then she subsequently moved to trading money markets and fixed income securities at FBN Quest Merchant Bank. Before moving on to establish a financial wellness company, her last role was at Parthen Partners Limited, a fixed income interdealer brokerage firm, as executive management, recording successes like launching the first ever Nigerian Treasury Bill investment app and successful commercial paper and bond issues. Our company, Oladele.com, is a social enterprise on a mission to bridge the pervasive financial education gap in Africa by providing high quality personal finance, investing, and economic education. They are committed to driving positive change by aligning with the United Nations Sustainable Development Goals, specifically focusing on Goals 1, no poverty, Goals 3, good health and well being, and Goal 4, quality education. She is an IFC LPI certified trainer with core expertise in investment strategy, personal financial planning, financial literacy, financial markets and instruments, economic analysis, and media as a tool for financial education. I would say she's an all-round educationist. Mrs. Ola is a prolific speaker on finance, investing, and economy-related matters. She is on the faculty of Tekedia Mini MBA and Joseph Business School, Lagos, and also a member of Adjunct Faculty of John Odige Oyegun Public Service Academy. She attended the Cambridge University Rising Women Leadership Program, and she's also an alumnus of the Oxford Executive Leadership Program. So you see that we have a versatile woman here to share her knowledge with us. So I would want you to share a virtual clap. Yes, I know. I think we have that here. And help me welcome Mrs. Ola. Good afternoon, ma'am. Thank you for joining us today.
Good afternoon, and thank you for having me. I'm excited to be here. Always excited to have events or host events along with the NESG. So this is always a pleasure, and I'm very happy to be here. I repeat. Hello, everyone. We're here to talk about money. It's always an interesting topic and a very important one, I dare say. But usually my sessions, just a heads up, are usually quite engaging. So I will be looking out for responses in the chats, right? It's not one of those sessions where you're going to be quiet and just watching. No, you're going to be answering questions. You're going to be sharing your thoughts. So if you are show me with a thumbs up with an emoji of any form to just let me know that you are ready for this session. I'm waiting. I can see a thumbs up from Deborah. Thank you. From the Pounds, the King, and Apple. From Bami, I see from Ekundayo. Okay, thank you so much. So let's get with it, right? The theme for today is self-care and financial health, creating a sustainable balance. So a little bit about me. I think she has run through my profile, so there's not much to say here anymore. But about my company, basically what we do is that we help people put their finances in order. I had a session last week with kids in elementary school between the age of 5 and 11. And the previous month, I had sessions with people about to retire. But this money conversation is one of those things that stay with you all of your life. So basically what we do is we help people put their finances in order and teach. So we have the company, oleroladele.com. We do workshops. We have learning sessions like this one. And then we have our investment community. And then we have our media expression, where we have our YouTube channel, podcast, our newsletter. And so you need to follow us on these channels if you want to learn about money in a practical, relatable way. These are some of the companies we've worked with in the past, and these are some of the traditional houses that we have been featured on. So let's get to the topic. The topic sounded serious at the beginning, but let me tell you what I take this topic to mean. How to live the soft life today and tomorrow. Meaning that you enjoy your soft life today, but there's still change for you to enjoy soft life tomorrow. So who can relate with this topic? Is it something that is a goal, because I think for me personally, it is a goal to be able to live soft life today, and then it's not soft life that will expire. And then when you're retired, you're like, oh, I need money. Oh, I'm broke. Oh, I have to move from Yaba to my village because I really can't afford Lagos anymore, you know? So it's something that is very, very important to talk about. So let's start with a story. So, and I want everybody to see themselves in this story. This is Chichi in 2009, and it could be Tunde, it could be Aisha, anybody in 2009. And this is Chichi at her graduation. Now, the following year, she became a copper. When she was a copper, she would take bus. She had a few days off. She went to Ibadan to hang out with her auntie. When it's time for lunch at work, she would go to that woman by the street, you know, or send the cleaner with a bowl, amala 100 naira, you know, and that's how she started. And of course, in terms of shopping, she would go to Ted Shoe Market, Yaba, you know, bend down and shop. And that's how she survived her copper years. And then fast forward to the following year, she became a full staff. So she was earning 300K a month. But at the end of the year, she had 180K in savings. Why? Because she decided that Ibadan is not okay. I need to tour the world. Ghana is down the road. Let's go to Ghana. Then she started mixing. I can't really do bus anymore. It's too stressful. So let me take bus sometimes. Sometimes I'll take cab. Sometimes, you know, let's mix it. Uber, you know, this life, what is this life about? Why do I have money when I can't enjoy it? And then she moved from shopping in Tedio Show, Lagos Island, to ordering stuff on ASOS, you know, exchange rate, ASOS, big girl, you know, and they'll deliver to her. And of course, she moved from that woman by the side of the road to ordering breakfast and lunch at TFC. Why? Because she can afford it. Now, fast forward to a couple of years after, right? She was the boss babe. Vacations are no longer Ghana. It's now Dubai. She has a car, has a driver. The amala she started with in her career, she's now eating the same amala, but like in a bougie place. Everybody knows where knows Knock by Alara. Like, I mean, it's a high-end local food restaurant in Lagos. And of course, she had moved from ASOS to buying Louis Vuitton and all them big names and all. The question is, who can relate with this? Who can relate with this whole change, right? From one level to another. I need people to be responsible. Nobody's answering me. You don't have to do the thumbs up. Who can relate? By show of hand, raise your hand. Anyway, I just need to know that you can relate with this. Maybe can relate with it. Who else? Abiodun. Okay, Deborah. Now, for her, she was earning 50 million, but after she finished spending all these things, at the end of the year, she had just savings of 1.2 million. And it happens. It actually does happen. Upgrading as the income increases, exactly, Deborah. But why is she upgrading? Because soft life, right? That's all. We don't need to make a sentence because soft life. We can't come and kill ourselves, right? And that's what we're talking about today. Now, just imagine, and we've all said we can relate with it, and I've asked that question, but just imagine she works for 30 years, right? She retires, and then her monthly pension payout, you know, monthly pension is based on amount you've accumulated, you know, they'll give you that bulk payment first. And then after that, they'll not pay you small, right? Imagine her monthly pension payment was 300K. And then her total personal savings at the rate at which she was going was 20 million. Imagine if she retired 2 years ago, and we are in 2024. How do you think she will feel with this, her financial situation? Any word that comes to your mind? For me, it's scary. Anybody? I'd like to hear what thought comes to your mind. Just imagine if she was earning 300K monthly as a retiree 2 years ago, and she's still earning that same 300K, because if you don't know, pension does not increase. It just stays flat. That money they start with is what they'll be paying you all through. It doesn't go up. Frustrating, exactly. I need more words. I need people to engage, right? Because it's something that we see around us. It's depressing, is worrisome. Any other words? Thank you, Abiodun, for scary. Exactly, it's scary. Imagine someone that retires at 60, right? And then all things being equal, you have another 20 years. Imagine just the change in 2 years. You would actually be scared. Ikechukwu says confusing, and that is very true. Agatha says she'll be financially screwed. Very true, because it is obvious that it can't work. So imagine someone who had been living, going to Dubai, chauffeur, Mercedes, even to buy tire. What buying tire? That's a long thing. Even to fill her tank of that Mercedes might take up to half of that 300K. So imagine. Do you guys know that this happens a lot? Meaning that people are so high and up there when they are working, but when they retire, the story is different. Do we know? Do we know that that happens? Now, that's the first do you know. The second do you know is that, do you know that if you work from 20, let's say all things being equal, you graduate at 20 or 21, and then you work till you are 60. That means you work for, give or take, 40 years. The money that you earn between 20 and 60 is supposed to keep your life from that 60 till whenever you leave the earth. So imagine if you are praying for long life and you are saying that you want to leave this earth at 90, 100, 110. Let's leave it at 90. So we don't mess with our brains. But let's say 90, 100. Let's leave it at 100. So you have 40 years of work, but that 40 years of work is supposed to fund you for another 40 years, because we are all praying for long life with good health and strength, right? Now, the question is, with that thought in mind, how are you able to gather enough from those 40 years for you to be able to live well in the remaining 40 years? And are you thinking like that? Because even the pensions that they are paying you is the accumulation from those 40 years. Have you thought about it before? Who has thought about this before? Or who is this a first time? If it's your first time thinking like this, let me know. If you've thought about it before, let me know. I'm looking at the chat. So, hi, Princess. Thanks for joining the call. If you thought about it before, your first time. Now, the fact is, whether you've thought about it before or not, doesn't change the reality of it. We all see it. We all have either parents or aunties or uncles who were doing fine when they were working, but the quality of life dwindles after retirement. And it's because they did not arrange themselves well. What they were doing is, I can't keep myself, let me enjoy. And they enjoyed, but the enjoyment was just for that day. We didn't provide for tomorrow. So that's the first thing I need to say is good morning. When you wake up is your morning. Let's hope that you actually wake up today. So now let's talk about this. What actually happens? What really does happen? It all starts with making money. Making money is basically exchanging time for money. Meaning I have a job, I run a business, right? I'm staying with my business, calling clients, chasing, blah, blah, blah. Or I have a job, a 9 to 5, I work, I go for meetings, blah, blah, blah. And then at the end of the month, I get a salary. It all starts with making money. If you're not making any money, if you're not exchanging time for money, except if your father is Dangote or Bill Gates, then you are not in the money cycle, you are just hanging. Yeah. But for most people, it starts with making money. When you make money, there's just two options. You either spend or you save. If you spend, let's say you make 100K and you spend 100K, right? Sorry, let me respond to Onyekachiku. Onyekachiku, your pension is static at the point where you retire. That's what I said. So when you retire, the amount they calculate for you as your total contribution is what they'll use to decide how much they'll pay you monthly. It will be increasing while you are working, but once you retire, that amount stays the same. Know that and find out more. Now, when you make money, make 100K and you spend 100K, what happens is that you have to go back to making more money. Now, if you know people that payday is 24th, by 18th, they start becoming cranky. They are snapping at everybody. But then by 24th afternoon, they are all happy and high again. Their money cycle is very short. That's it, right? And now that person is a perfect candidate for quality of life drop at retirement because you are not doing much with your money. Now, if you make 100K and you spend 60K and you save 40K, there are two options. leave it in the bank or invest. If you just leave it, that means you collected money using your bank account. That's the end. But if you leave it, right, imagine if you put away 100K, saying that you wanted to use it to buy 50 tubers of yam, or let's say 40 tubers of yam in January. You know that today it will probably buy you like 15 and you didn't do anything wrong, right? So imagine if you leave it in the bank, over time, inflation is going to make you need to work more. So if those 40 tubers of yam were supposed to be for marriage rights, meaning that the family has sent you lists, and the list needs to be presented in December, you know that if you had that 100K in January, your list is not complete anymore. You need to make more money. Yeah. So inflation will make you make more, make you have to go back to working more. But if you invest the money, there are two options. It's always a fork. You can make profit or you can lose money. Of course, if you lose money, you're back to ground zero. You have to go back to working. But if you make profit and you keep making profit, you get to a point where you don't really need to work anymore. You can actually stay in this place where all you are doing is living on your investments, right? Now, the first thing I need everybody to do is to look at themselves and say, where am I in this cycle? Am I in safe spend living bank? Just carve out your own position. Where are you? Why? Because it matters. You can control your actions, but you can't control the outcomes. If, for example, you are a get rich quick overnight person, you would have lost a lot of money. And it's just, right? So if you have been losing a lot of money, for example, the question you need to ask yourself is, how do I stem this tide? The fact is that investment is a risk, but it's not a random walk. It's not like gambling, right? So if you are consistently losing money, then there's something you need to fix. But if you are someone who has been leaving money in the bank and inflation is biting you hard, then your own question is, how do I start investing, right? And then how do I make sure that my investments are profitable? And there is a way. So let's move on. Hope is making sense. Hope is making sense. I'm trying to.
Yes.
Okay, because we are saying, how do you live the soft life today and the soft life tomorrow? Now, so this is where you are right now. Wherever you are in the money cycle, your goal is, how do I move myself forward? That's your next task. So if you are, for example, someone who's enjoying themselves right now, I know that a lot of Nigerians will say in this economy is tough, blah, blah, blah. But there might be some things that you maybe 5 years ago, based on where you were working, you couldn't do, but now you're able to do, right? And it's not even not necessarily the big things like traveling, but the choice from taking bus to taking cab, choice from having a driver, the kind of car you were driving before, all those little changes, they make a difference. Now, let's go to data, right? Why is it? Because it's important to lay a foundation so that you know that you know where you stand, if there's a problem or not. Now, the central bank published a Nigerian financial literacy baseline survey. Basically, they wanted to know where everybody was, as in have a baseline survey, and basically the survey was supposed to be checking how financially literate we were as a country, as people, right, in Nigeria. And the idea is to have that baseline survey, and then they will now be comparing or measuring growth over time using the same questions, right? And so what were their findings? 33% had not heard of the term interest. More than half indicated they were worried or very worried about large unexpected expenses. Now, to highlight this was a massive democracy. This was a massive, democracy. This was a massive sample size, right? It was a massive sample size. It was the whole of Nigeria, educated, uneducated, male, female, different age brackets. It was a broad survey, right? Very, very detailed, extensive, every state in the country represented. Now, these were their findings. Now, around 50% had never sought financial advice. 40% of the population indicated that information on available financial products is not adequate for decision making. So this is the general thing, generally what people felt. Now, we did a survey, our own survey. We don't have the capacity to survey around Nigeria. We just did a survey, LinkedIn, professional communities, blah, blah, blah. And these were our own findings, right? Less than 30% of respondents could manage their finances and invest well. 51% needed more information on how to save, meaning I earn this amount, I'm spending this, how do I save the balance? As basic as that is 51%. Less than 30% knew how to start investing. 76% lacked knowledge about the various investment options. 84% did not know how to create an investment plan. Only 20% had information about estate planning. These are people that can come on Zoom, that can be on LinkedIn, that can be on Instagram. It's that demographic, working class people, and the data is still consistent with the people that did not go to school, the market women, the people in the hinterlands that have no access to Zoom. So understand that there is a general problem. Now, what we have found is that a lot of professionals and business owners, despite being skilled in their fields, are unable to manage their finances effectively. And it has led to financial pressure, including reduced efficiency and also health challenges, right? While there's a lot of public information, people actually are not aware of what they need to do to put their finances in order. Why am I putting out this data? So that you wake up, so that you are intentional about not being part of the statistics. Part of the data also shows that a lot of people's quality of life dwindles after retirement, meaning you are very independent, and then for most parents, by the time they have retired for like 7, 10 years, they have increased dependency on their kids naturally. And then if you don't know, inflation is always designed to inflate. There's never been a time when 10 years ago, something was worth 100K and 10 years after is worth 10,000, except if they remove zeros in the currency. Even the most developed nations, inflation naturally, slowly in more developed countries, naturally tends to go up, right? Now, in simple English, 7 out of 10 people here do not have their finances in order and will not make the necessary adjustments to fix it. My question is, do you want to be part of the statistics? So where do you start from? Very simple. And this is an apple. What we do when we see an apple is we eat the apple. When you finish eating the apple, for most people like me, I throw the seed away and that's it. But a farmer sees that apple and like, nope, I'm collecting apple seeds today. They collect the apple seeds, and after they collect the apple seeds, they share it around. They plant it around rather, on good soil, good environment, blah, blah, blah. And then when you give it time, you first see that it feels like nothing is happening, normal. And then, but then imagine someone says, well, I planted an apple tree here, but it hasn't yet come out. So let me dig it to check if the seed is really there. You have killed it, yeah? But they leave it, and then after a while, it grows, it grows, it grows. Apples generally take 3 to 5 years, depending on the species. And in the 5th year, all things being equal, you have apples on the tree. Remember, you planted seeds. The apples on the tree will be more than 10. There will be plenty, right? Imagine if you take those apples, take out the seed again, and replant it. What you will have is an orchard. Now, think of the apple as the fruit of your labor. In that fruit is a seed. If you leave that seed in the bank, if you eat the seed, gone. If you leave the seed in the bank, inflation will help you dry it up, shrivel, that's the end, right? But if you take that seed and invest it over time, it might look like nothing is happening. It might look like small amounts, but when you give it time, right? What will happen is that the amount of interest you are getting will begin to pile up. If you take that interest and you reinvest it over time, it begins to make more sense. Your capital base begins to grow, right? Such that nobody is telling you don't eat the apple. You have to eat the apple because you have to live, aka soft life. But what we are saying is that there's a seed inside there that if you eat it, you've enjoyed today, or if you use it for facials, you've enjoyed today, or your face is shining, but there's nothing for the future. And that's the game, right? So what are you supposed to do? As simple as it sounds, right? Don't eat your seed. Keep it. Find the right location. Find the right soil. Sow the seed. Give it time. And harvest it. When you harvest, sow more seeds. Don't take the harvest and use it to do a party. Because some people will get their dividend and use it to shop. what we are saying is carry that dividend and put it back, right? And over time, you would see that you grow. Now, what are the enemies of your financial stability? Lifestyle inflation, we've talked about that. Overtrading, going into debt that has no head or tail. Borrowing, taking hair on credit, things like that. But if you are, for example, able to get a mortgage, that is debt that will increase in value, that the asset will increase in value over time, then it's okay. Not considering you in the equation is like someone who has school fees to pay in 2 years' time. And then they say this is a property, it's going to grow, it's going to grow. But we know that property price don't go up, don't grow so quickly. You now carry your school fees money and put into property. And then every other person is fine, but you are now cash strapped. You are forced to sell below value because you are under pressure. FOMO-driven investing, I hear people are doing something, I follow them. Putting your eggs in one basket, I think we've heard so much about that. Ignoring the environment. Imagine if you decided you wanted to grow apples. Apples cannot grow in Nigeria, but they can grow apples cannot grow in Lagos in Nigeria, but it can grow in Jos. So imagine if you're in Lagos, you either have to do a greenhouse farm or you have to move your farm to Jos. But if you put it in the wrong environment, even though the seed and the soil are fine, it will not grow. Working alone, you'll be coding until you now realize that there's some information that you should have heard about that investment, or you won't have, and you won't have, if you had heard the information, you would have gone into investment. So it's a thing. You need to talk to people and hear what other people think. And finally, not investing. Inflation will have you for lunch. Thank you so much.
Thank you so much, Mrs. Oladele. Yeah, so I was just going to mention, please, do we have any, obviously, I know we have questions. There's a lot of questions we can ask regarding investment. Do we want to ask her how we can better invest our money? I don't know, maybe some funds we think we have ideas we want to invest in, and how she can give us more knowledge on how we can invest this money. If you have questions regarding, I know personally I have a question regarding mutual funds, if you don't mind. So if you have any other question like that that we can, share with her, then she can, give us the knowledge she has regarding that. You can drop her questions in the chat room. Yeah, so please drop the questions, then she can attend to them. Okay, Toby has his hands raised. Toby, um, let me just try and unmute you.
Hi. Good afternoon.
Okay, good afternoon.
Yeah, good afternoon, Ola. Thank you so much for the insightful presentation. For me, it's about the investment. You talked about the stage where you are either saving or you are spending. I think that's the stage where I am currently. So, but I want to just ask, there are so many schemes out there, that are even promising some, I call them unrealistic dividends, telling you bring your money here, you get maybe 100% or something ROI. So can you just advise on safe investment options, mutual funds that maybe that we can start with a low amount, then what are the prospects for return on investment? So thank you.
Okay. So I get this question a lot, and I always tell people when you are starting with investing, I recommend that you start with regulated entities. What are regulated entities? Regulated entities are entities that are regulated. Basically, in every financial sector, there are regulators. In most countries, they are generally called Securities and Exchange Commission, right? They are the ones that are checking what people are doing. Most of these schemes that you are seeing, they are standalone. Put out ad on Facebook, put out ad on Instagram, word of mouth. The only thing that they might have at the best is maybe they are companies registered with CAC, but they might not be licensed to take money from people, right? So what you are looking for is companies that are licensed, SEC licensed to take money from people. Why is that important? Because if you are not financially savvy, you won't know the right questions to ask to differentiate between the fake and the real, the fraudulent and the clean, right? And then the good strategy versus bad strategy, because it might not be fraud, but the strategy might be bad, right? So most times, if you work with regulated entities, they have to, what's it called, clear their products with the SEC, such that those products are generally fine for you to invest. Now, coming down to low entry investment opportunities, you already said mutual funds. Generally, you can invest in mutual funds with as little as 5,000 naira as at today. You can even invest in stocks with 5,000 naira as at today. So I always tell people that there's no excuse for not investing. Now, how do we know which ones? Go to the SEC's website, and I always try to tell people that, see, it's money you've worked for. If me saying go to SEC's website is going to say, oh God, then don't do oh God when the money disappears because you've already said it in front. Do you understand why? Now, so what am I saying? Go to SEC's website and you just see returns. You just see fund returns. You just see fund ranking. You see all that information there. With that, you can have an idea of, okay, these are the top names. Let me just at least start with them, right? That's one. And another thing to know, oh, I didn't add for low entry, Nigerian savings bond is also low entry. Nigerian savings bond, you can get 18% return right now, which I think is good anywhere in the world, right? You can get that with your 5K or 10K, right? So I'm giving you 3 options. But major thing I say, please start with regulated entities. Start with regulated. It's always safer. People that have a license to take money from people. When you have become savvy, then you can now go into those one-off standalones and then you can judge better.
Okay, thank you so much.
Thank you very much. Okay, I think I'll just hold my own question till probably later. I have questions in the chat room. So Abiola says, what are the surefire investment opportunities out there in view of the biting economic upheavals?
And by surefire, I presume it's where your money will not disappear, right? That's what I presume. It's not about return now, it's about safety. The options I just gave, mutual funds, savings bond. So mutual funds and savings bond, your money, all things being equal, your money should not disappear, right? Now with stocks is a little dicey because depending on the company, somebody else might be laughing and another person will be crying. And we can't go into which stocks here. So I'll say tread carefully when it comes to stocks, because there are some companies that are negatively impacted by the negative economic situation that we have, and some that will benefit from it. So if you are going to buy stocks, buy the stocks of companies that let me explain. During COVID, right? Everybody went on Zoom. You know, Zoom stock price skyrocketed. Why? Because despite the fact that everybody else was crying, Uber drivers would have been crying, and hotel operators would have been crying, Zoom benefited from the lockdown. Do you understand? So there'll be those companies that come rain, come shine, because of how they are structured, they'll benefit from the economy. Then you can buy those stocks.
Okay, thank you very much. Abiola, I hope that answers your question. So I'm going to move on to Candace's question. So she says, my question is, with the increasing exchange rate and inflation in prices of goods and services in Nigeria, what kind of business can a young employee invest in for future security?
So this question is still talking about investing, right? It's not even talking about what you can start. If it's about investing, then all the things I've said, they're already basically looking for investment opportunities, right? Now, I always try to tell people, because, for example, you say inflation is 27%, and I'm saying savings bond is 18, right? So people say, why should I put my money in it? Because inflation is here, right? And I also said that inflation would always inflate, meaning that inflation will always be there, whether it is high or whether it is low, inflation will always be there. Now, bearing that in mind, I talked about the power of compounding. If you look at the apple, the seed that was planted for that tree was a tiny seed. And that is how it is generally when it comes to investing. Someone was talking about Nestle, and Nestle just posted losses, right? Q3 result was the first 9 months they declared losses that they've never done before, if I remember clearly, right? And someone was like, "Oh, Ola, are you still in this stock?" I said, "Yes." And I'm like, I'll talk to analysts, but I think it's economic cycle. So there'll be ups and there'll be down because they're fast moving consumer goods, people will still have to eat, right? Now, but why was I not bothered? Because I know when I entered into Nestle, I know the amount of dividend I've collected. Do you understand? And I've reinvested that dividend. So I know how my Nestle conversation has grown, so that even if you tell me that I'm cutting a loss right now, I'm not actually cutting a loss. I have made money over time. Well, because I have compounded. So if you look at it from that compounding perspective, you put 100 naira, you get 18 naira in interest. Your next year, your profit, your capital is now 118. If you put that 118 at 18% again, and you keep doing that over 10 years, you will realize that at some point, the money has gone beyond where you are. So there's a time factor in this whole investment journey. So, and then nobody's going to sit down and say, "Oh, for sure, I'm going to give you 100% return on your Nestle today." If it was so sure, they won't collect your money, they'll go and borrow and make that money for themselves. I hope that is clear. So as a worker, you need to have a steady investment culture and a steady compounding culture, meaning you get returns, do not eat it, put it back in and let it work for you. Over time, I can tell you that if you continue with it, buying stocks, buying bonds, all those things over time, in a 20-year period, you will be glad you did it.
Thank you very much, Ola. Kendi, I hope that answers your question. So I would be moving on. I think we have about 3 questions here. Tolu Lopez says, kindly advice on dollar-denominated investments. Also, what is the place of insurance in self-care and financial health?
So when it comes to dollar-denominated investment in Nigeria, we have Eurobond funds generally. If you don't have capacity to buy a Eurobond by yourself, the easiest way is to buy Eurobond funds, buy into Euro. So it's a mutual fund, but what they invest in is Eurobond, so you can invest your dollars there. That's one. Then secondly, there are some apps these days that give access to what's it called? US stocks, right? Those are options also. Then as you build your wealth over time, right, there are actually options for you to buy properties abroad, right? Even as a non-resident, but it takes a while to build that kind of capital and stuff. But those are the options that are available. And when it comes to insurance in self-care and financial health, it's a very valid question, right? But there's somewhat of a limit to how many things we can mention in a short session. But I tell you for free, right? Insurance is a significant part of your financial stability, right? It might help you in terms of, so if you have health insurance, then it does help you in terms of self-care. For example, I went on a trip in September and my flight was delayed in Nigeria, in the Nigerian leg. And then I had to stay and so I missed my connecting flight and I had to stay in the airport for 12 hours to take the next flight to my destination. Insurance is going to pay me almost $300 for that. That's very good for self-care. And I paid, my travel insurance was like maybe 12,000 naira. And they're going to pay me about 300 based on the claims that I've made, right? Now, think about it. I didn't spend any money. Just by just doing that, I have 300 I can use to shop. Do you understand? So that's where insurance comes in. That's one. And then imagine it was just a layover, a long layover, which I could accommodate, right? But I've had situations where I missed my connecting flight due to some delays, and then I had to shop. I had meetings, so I had to go and buy new clothes, blah, blah, blah. I had to just restock everything. Insurance paid for it. Insurance paid for it. The airline paid for it. So I made money, right? And the insurance, not knowing that those things were going to happen. That's one. Another story is that I do have a client, because in my company, we do one-on-one sessions where we help people put their finances in order. We had a client who who came to us. So we do like a review of your financial situation, blah, blah, blah. And for her, she used to travel abroad for health checks every year. And she used to pay out of pocket because her company only gave her Nigerian health insurance. And so she went to, so I asked her that, okay, so if anything happens and they find something abroad, will you come back to Nigeria to treat it? She said no. And said, like, okay, so you need to get international health insurance to cover you. At the minimum, to cover those health checks. But if there's anything, it will cover you. Fast forward to 2 years later, her son had to be in intensive care in North America for a month. The bill was almost $200,000 insurance paid. So you see some of these things. I think that story is self-explanatory on why insurance is important.
Thank you very much. Thank you so much. So, Lu, I hope that answers your question. So, you had mentioned something about apps that give us access to foreign stocks. So, I think the next question is a bit aligned to that. So, she says, are digital investment platforms a good option for buying stocks and other investments, or is it good to get a stockbroker?
So these days, every stockbroker that I know has an app, right? And you don't need to have a prior relationship with the stockbroker to download the app. What I mean is, when you download the app, you create an account. It automatically open an account for you with the stockbroker. So things are not like before that you have to carry your paper and be writing and filling forms with the stockbroker. You can actually download their apps and start investing, fund your account, like no going to their whatever. But the only thing I would say for safety, like for me personally, because I'm in the financial services space, I know who is who. But for you and anybody, any other person that will listen to this later, go to the SEC's website and just look for a list of stockbrokers, right? And any name that you think looks familiar to you. When I say looks familiar to you, for example, a company might be affiliated with a bank, you just need to have some anchor, right? Download their app. You will find their app on the App Store and open an account and you'll be fine.
Okay. So, necessarily, we don't need a stockbroker.
No, you still know. What I'm saying is that you would have a stockbroker, but you would. So let me explain. Okay, now I understand your question. When you buy on the app, they've done it such that it goes straight through from the stockbroker to the exchange. The stockbroker doesn't have to manually do it, but there needs to be a stockbroker as connected to that app for you to be able to buy on the exchange. So you still need a stockbroker, but you don't have to interact with one the way it was before, that you call your stockbroker and send an email. No, from the app is directly connected to the exchange, but it's because there's a stockbroker's license attached to it.
Okay, okay. I understand. Thank you, Shay. I hope that answers the question. Okay, I'm taking the next one. We still have about 12 minutes of Mrs. Oladele's time here. So if you have any other question, please drop it. So the next one says, for entrepreneurial purpose, what are the viable ways of harnessing capital for smooth takeoff of a business idea or plan?
So this question, I don't really understand it too. Let me know that. So I would say you need to ask like a specific question that ties to something. So I have a context for this, but it's just very open-ended. I don't know what you mean by harnessing capital. I don't know what you mean by smooth takeoff of a business idea. So you would need to like explain it in a way that we can understand and can give you an answer.
Okay. Abiodun, can you please add more context to this so she knows the angle to which to tackle the question? Okay, I'll move on to Princess Ewa. She says, for a starter, what is the best percentage of someone's income to save or invest?
Okay, I would say, I won't say there's a best. I would say, first of all, do what you can and be true to yourself. It depends on your lifestyle. It depends, no, not your lifestyle. It depends on your obligations. We might both be colleagues earning the same salary, but if I'm the last born, living with my firstborn, who is a senator of the Federal Republic of Nigeria, and I'm not spending anything, right? I can afford to save 80%, right? And say, okay, maybe I give tithe and I give 10% to people because I'm not doing anything with my money. Maybe I have shopping allowance, blah, blah, blah. But if you are the firstborn of 10 children, right? I would say in that kind of setting, at the minimum, do 20%. Because black tax is a thing. And if you keep looking at people, you will never end up saving. The needs never end. So in that kind of situation where there is a massive need, you have to draw a line and say, this is what I'm putting away for my future. So we all don't crash together, right? At that one, I'll say try for 20%.
Yeah, 20% of your income. Okay, thank you. Abiodun, I'm still waiting for you to add more context to that question so she can answer you. And if there are any other questions, please drop it in the chat. So I wanted to ask, the first question I think you had answered when you were answering to be something about the mutual funds. Yes, a big fan of mutual funds. But then I wanted to ask again, just open-handed for anybody that wants to pick up that knowledge. I know we say saving in the bank, inflation, you probably save 100,000 naira. By the time you go back in the year, probably see 95,000 naira. So for those that are just saving, normal savings accounts and fixed deposit accounts, is it the same inflation that's, do they experience the same level of inflation? So for instance, your normal savings account, you probably have 95,000 after a year. For the typical fixed deposit in a bank, are you experiencing the same amount of loss or is it different?
My first question is, why would you have 95K after 1 year? You won't have 95K 1 year.
It's
Inflation,
just not
so
not stereotype. I'm
so
just
theoretically, that's not even the right theory to use, because that's not what happens. Inflation, is literally that you will still have that 100,000 in the accounts. But what will happen is that if that 100,000 would have bought you 10 pairs of shoes last year, it will only be able to buy you 5 right now. So your nominal amount will still be the same, 100K, but the value, what it can buy, would reduce. So inflation is very silent, such that if you are not aware of it, it's actually affecting you. Case in point, if you are someone who has been saving over the years, and like, okay, all this investment thing, I don't really understand. I just save, right? And you've been saving for 10 years, let's say 5 years. 5 years is short, is a 5 year period. Just before the pandemic, 5 years you've been saving. You realize that if you had 1 million in saving in 2019, right? The 1 million in saving in 2019 is probably almost equivalent to about 3 million in saving this year, in terms of what it can buy. In terms of how it's, if you just say that 1 million is for fuel for the year, yeah, in fact, it's like 10 million if that's the case, if you want to use fuel as a yardstick. Do you understand what I mean? So
yeah.
that's the silent impact. You will think you are doing well because the cash amount is piling up, which is good. But if you leave it idle, the value is going to erode over time.
Okay, so those instances where there are deductions, bank deductions. So can you really say, oh, I left 100,000 naira in a bank and at the end of 1 year I'm still seeing 100,000 naira? I think that's where
Yeah,
I was.
it depends on your bank, because my bank does not deduct anything from my account if I don't move money. In fact,
Oh,
they give me interest. So you need to check with your bank. The two banks I use majorly, if you don't withdraw more than 4 times in a month, they will pay you interest.
okay.
So you need to check with your bank. Some banks are interesting, and I know that, but don't just assume it's the same everywhere. No, it's not. If I put 100K in my bank account, I can tell you for free, I will still have that 100K next year. The only thing that it might charge me for is if my ATM expires in that period, they'll
Okay,
debit
those deductions.
they'll debit that 1K for ATM. That's all. But if it's not within an ATM expiry period, my money is complete. It would even increase.
I'd rather leave my money in my mutual fund than even in the bank. So I think Abiadu added some context. So he said with the cutthroat interest rates experienced with banks and other loan sharks, what are the other viable ways raising capital for smooth takeoff? I don't know if this provides more
Yeah,
context.
so this is funding a business idea. I generally do not like to start a business off with a loan. If the business idea is so fantastic, talk to people around you, they should buy into it, and you find people that will support you on an equity basis, right? Or a pay me back, don't start paying me interest until like 2 years, then start paying me back small kind of thing, right? Those kind of soft structures. But you've not yet started the business. You don't know how much cash flow is going to come in the first year. How do you know that you can pay that loan off? because servicing loan is cash flow, right? So I do not just generally recommend you starting a business off with a loan, an interest-paying loan. Go and find people to support your business. That's how most companies start. Equity financing, people just drop small here, and try as much as possible to start small and have like a proper proof of concept before you get big money into it, so that if it's going to be shut down, it's shut down and the losses are minimized.
Thank you very much. I hope that answers your question. One last question from me, please. I know private equity, I know some of them could invest in your business for maybe like about 7 years. They collect management fees and the like, then return on investments. But for family offices, is it the same plan as an LP or private equity? Do they work in the same kind of context for family
So family
offices?
offices are varied. Family offices, so for those that don't know, a family office is, let me use a relatable person. So for example, a Dangote in Nigeria, most of his investments will not be in his name for tax purposes. He will probably have like a family office, right, where they manage his assets because he has a lot of assets. So he will have asset managers, right? Like you would have Stanbic Asset Management. You would have some people like that, highly skilled, making sure his investments are going well. That's what the family office is. But then the difference between that and a regular asset manager is that the family office will have instructions like when he has a new child, add them to the list. This is the school the child is in. So the family office will pay school fees. The family office would, just sort out their lives, right? When it's time for a vacation, family office will sort out tickets, blah, blah, blah. That's what family offices are. Now, bearing that in mind, it means that each family office will have their unique structure and what they put money in. So you can't exactly, it's only if you give me like one family office with their data and then compare it to private equity, but I can't give a generalized answer when it comes to how family offices work because they are all varied.
Okay. Thank you very much. I'm seeing Shay's and up. I don't know if you can unmute or to just drop the question. That would be the last question we're taking, actually.
Hi, can you hear
Okay.
me?
Yes, please.
Okay, great. Good afternoon. Thank you so much, Ola, for your presentation and all the advice. So just back to the question about the digital platforms and, stockbrokers. So part of what I really wanted to know was in terms of digital platforms, for example, they can have like categories of stocks. They can have like maybe low risk, medium risk, high risk, but you kind of don't really know what stocks are in there. You can't really sort of maybe get advice, maybe someone who can sort of regulate the stocks that you have in your portfolio and sort of advise you on, what kind of stocks to add, sort of what's going on in the market. So that's the idea I had. So when you use like digital tools, it seems like there's a bit more, shrouding of what's going on, and you don't really get that sort of personalized advice. So do you have anything that you have to say to that? Do you think you can still sort of get more of, like, are there apps where you can actually maybe interact with the stockbroker? You can get more, hands-on advice, etc., etc. Thank you.
Yeah, I understand your question, but like I said, go to the SEC's website and look for the list of stockbrokers. Find one that tickles your fancy and go and look for their app in the App Store. When you open that account on the app, right, you have technically opened a stockbroking account with them. Well, I forgot to even add it, that after you open the account on the app, give them a day or two. They will send you an email notifying you of your CSCS account number, meaning that you actually have a stockbroking account, like a normal, regular stockbroking account. Now, with opening that account, all the normal emails that they would have sent to their regular clients that walked in to open an account, you will get them. Stock recommendations, market updates, corporate events, all those things, you will get all that. Most of them send stock recommendations every week. And they also send like sector analysis from time to time. So maybe this quarter or this month, they're reviewing health sector, random sector, right? And they will do an analysis of the stocks there. They will do an analysis of the companies, where the company's directions are. Sometimes they do webinars and stuff, right? So I would say, at least in Nigeria, I don't know of any stockbroking house that has an app on the App Store that does not do this kind of engagement with their I wouldn't even call them community, with their clients. You just have to be intentional about opening the emails and checking what they are offering in terms of events and calls and stuff, and then jump on them.
Okay, thank you.
Thank you very much. Thank you so much, Mrs. Oladele. Thank you for honoring our invitation. We appreciate it. It's been 1 hour of very insightful session. I believe our participants have picked 1 or 2 knowledge, that they are running with in their personal lives, saving, investing, not just spending anyhow. So I'd urge us to please, check out the website, oleroladele.com. There is so much more to learn. There's so much more to gain. Join the community and let's thrive in our personal financial health. So thank you very much. Mrs. Bemi, I don't know if there's anything you want to add to this. I'm not sure she's there. Madam Bemi, are you on? Okay, so I guess she isn't. Thank you very much, Mrs. Oladele. Really, really appreciate it. If you have any like I said, please log on to the website oleroladele.com. If you have any other questions you want to ask her, you can join the community, and I'm very sure they'll be more than willing to to tend to you. Thank you so much. We appreciate you.
I forgot to add, sorry, I actually have a YouTube channel which will have more like information. So it's
Okay.
at Oler Oladele on YouTube. It's Oler Oladele on YouTube. So just check me out. You can like so much videos to learn and stuff on it. So check it out and subscribe.
Yes, please let's subscribe on YouTube at Oler Oladele. Check out the website as well. Join the community. Financial health, it is not something to even to leave. As much as we care about mental health and physical health now, financial health is something we need to really, really be keen about as well. Thank you so much for making our time. I really appreciate you. God bless you and have a wonderful day. Thank you, everyone.